Ladies and gentlemen, good day and welcome to the Q4 FY24 earnings conference call of Kontor Space Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh from Kirin Advisors. Thank you, and over to you, Mr. Ganesh.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Kontor Space Limited. From management team, we have Ms. Kanan Kapoor, Managing Director, Mr. Kanak Mangal, Whole-Time Director, and Mr. Tarun Gupta, Company Secretary. Now I hand over the call to Ms. Kanan Kapoor. Over to you, ma'am.
Thanks, Ganesh. Good day, everyone. I warmly welcome you all to the Kontor Space Limited conference call today. We are excited to discuss our impressive performance in H2 FY24. Before we dive into the specifics of our financial results for H2 and the entire fiscal year, I'd like to provide a comprehensive overview of our company and its recent achievements. Before I go ahead, I want to thank each and every one of you for joining us today. So as you all are aware, Kontor has been established since 2018, and now we have, post the IPO, we are a prominent player in the space where space as a service industry, offering innovative workspace solutions through our rental and management of commercial properties. We take pride in being the first co-working space company to be listed on the Indian stock market. It is a testament to our commitment to transparency, accountability, and shareholder value. Our core business revolves around acquiring and leasing properties, which then we sublease to a single or multiple clients on a per-seat basis, providing flexible and modern workspace solutions. We invest in refurbished properties to meet the unique requirements of our clients, ensuring optimal functionality and aesthetic appeal. So Kontor projects itself as a premium affordable player where we provide solutions which are pretty much in the luxury space but at affordable prices. Currently, we operate in the co-working spaces across 4 locations: Thane West, Pune, Port, and BKC in Mumbai, strategically positioned in the key CBD areas. So these locations boast a combined seating capacity of approximately 750 in Thane, 300 seats in Pune. We are running a managed office center in Port, which has 60 seats given to a single client, and we have 120 seats in BKC. All these locations are very strategically located and have great access to transportation network, which reduce commuting time and facilitating productivity for our clients. Our commitment to expansion and innovation is extremely evident in our recent acquisitions. We recently announced the 2 new centers which are upcoming. One is in Mahape in Navi Mumbai, and the other one is in Andheri East MIDC. In fact, the Mahape one is about to begin on the 1st of June, and we are very pleased to announce that we already have a 50% anchor in that property. MIDC should be functional from 15 July. So, we are pretty much in what we had committed during the IPO with these 2 centers coming up. In addition to the managed office spaces...
Sorry to interrupt, ma'am. Your voice is breaking.
Is it okay now?
Yes, ma'am. Please continue.
So, in addition to our managed spaces, we are introducing a new managed office setup in one BKC itself. So we already are running an existing center, and we have taken up a new center in the same building. This is, in fact, to cater to the existing clients as well, who are growing in terms of their requirement. So there was an internal need itself, to add more space and seats for them. So we have added that as well to our portfolio. Now let's shift to the financial performance for H2 24 and the full fiscal year. So Kontor has delivered strong financial results, underscoring our growth trajectory and profitability. For the second half of F2, we recorded a revenue of 6.38 crores with an impressive EBITDA of 1.89 crores, resulting in an EBITDA margin of 29.59%. And our PAT stood at 0.99 crores with a PAT margin of 15.47 with an EPS of 2.03. For the full fiscal year of FY24, Kontor Space reported a revenue of 11.03 crores with an of 3.97 crores and an EBITDA margin of 35.97. Our PAT for FY24 was 1.95 crores and the PAT margin was 17.66 with the earnings per share of 4.02. Going forward, we are actively pursuing geographical diversification, wherein we are looking to expand beyond Maharashtra and look at other cities as well, especially key business hubs like Bangalore, Hyderabad, and the NCR region. This expansion is driven by the increasing demand for co-working spaces and our commitment to enhancing our brand presence. I mean, this is something that we've had a very clear vision about, and we are moving pretty much in the same direction. With this geographical diversification, we aim to actually double our seating capacity annually, and we aim to reach 10,000 seats by FY26 to meet the evolving needs of our clients and positioning ourselves for substantial growth. In fact, post the IPO, we've got some MNCs as well who have joined us, especially at the 1 BKC center. So the fact that we got listed made us, check all the boxes very positively for us on the regulatory aspect, because automatically we were very compliant and fitted every norm that was required by the company. We are intensifying our efforts to improve operational efficiencies and boost profitability. By leveraging technology and implementing enhancements, we are focused on driving efficiencies across our operations. These initiatives are essential to our growth of enhancing our market presence and capturing a significant share of the co-working space market in the near future. In fact, as we speak, we are also in the process of negotiating other places within Mumbai itself. And, hopefully we are looking forward to breaking some positive news soon on those lines. In addition to this, our customer satisfaction remains our top priority. That is something that we've always been focused on, and we take pride in saying that our oldest customer has been with us from the time the company started, and he stuck around, and in fact today he's also the largest customer for us and continues to stay and is very happy as well. In that sense, we continue delivering exceptional value and fostering long-lasting relationships. As the first co-working space company to be listed on the Indian stock market, Kontor continues to lead and innovate in the dynamic co-working industry. Before we dive into the question and answer session, I want to express my sincere gratitude to all our shareholders for being an integral part of our growth and journey. Your support and involvement have played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open the floor for question and answers. Thank you once again for your presence and continued support. Appreciate it.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and then one to ask questions. The first question is from the line of Yashwanti from Koji Finvest. Please go ahead.
Yeah, thank you. Good morning, everyone. So, ma'am, just wanted to understand that your EBITDA margin was around 43% in FY23, which has come down to 36% in FY24. So what has contributed to a degrowth in the EBITDA margin?
So the new center that we started in BKC, so generally the turnaround time is about 3 to 4 months to fill up a center, when we don't have an anchor client in place. And this was the absolute speculative inventory that we took up. So it took about 3 months for it to fill up. And that rent outflow is something which has, affected the EBITDA. But this is something that will now reflect in the H1 numbers for this year, because that will be an additional thing that will be added.
Okay, so
in fact, that number is exactly equal to the rent that was paid. The difference in the EBITDA. So we will now be seeing the benefit of that in the current year.
Okay, so as on date, what is the occupancy rate over there?
It's 100% occupied.
It's 100% occupied. Okay, and then we can see this margin reaching to around 40% plus for the current year, right?
Definitely. It will come back to, what it was prior, because so also there will be an addition of the fort, the other new centers. In fact, Mahape also will start from 1st June. So there'll be 4 months of income coming in, because there we already have a 50% anchor in place. And then on July 15th, we also have the MIDC center. So all those numbers will be reflecting in H1 of FY25.
Okay. So like H2, we are seeing the current 40% growth in your top line. So what kind of a growth you can see for FY25 for the top line business, that is the revenue business? When you see there are the 3 facilities coming on a board.
See, personally, I would really like to see the top line doubling up, because that's the way I see it growing. Okay.
And you mentioned in your opening remarks we have the 3 currently operating facilities in Mumbai. One is 3 in Mumbai, one is Thane, and one is Pune. So can you please help us understanding what is the rate differential, or what is the average rate per month we can get it from these 3 different localities?
Hello, ma'am. So This is Karan Gupta. So I would like to continue with this question. So the question, because we can't take out an average for this, because the 3 properties we have rented is in the different parts of the Mumbai. So we have the different rates over there. So, and the capacity also are totally different. Means one is at 700, more than 700 seater, one is at 60 to 80 seater, plus one is at 100 to 120 seater. So there is no leveraging out or something averaging out, I would say, regarding this.
Average of the 3 properties. I'm asking what is the individual rate at 3 properties, if you can guide us.
Okay, so the individual rates varies from, means if we can expect from it is anywhere around 10 to 15,000 per seat. Plus if we can go to the port side, that is also something around, so if we can go something around in the port center, so it is given to a managed client. So it is around 8 to 9,000 plus this 8 to 9 lakh, And if we can come around this BKC being a premium center, and so we can get something around 45,000 per feet.
And this is per month rate per feet, right?
Yeah.
Okay. So you also mentioned somewhere one of your address to the investors that you wanted to enhance your capacity from around 2,500 seats currently to around 5,000 seats going forward. So what is the timeline to expand this to double the capacity, and what kind of a capex you would be requiring? And thirdly, which location you will be targeting?
So, this, firstly, I would, in this line, we have started working. So for MIDC center and Andheri center, we have already taken for and will be operational from June and July respectively. So in this financial year 25, we will be doubling our capacity to 5,000 seats. And in the next financial year, we are targeting to again double our capacity. So we are targeting the prominent corporate hubs where we can have the anchor client in place, so that the capex would not be much required.
I'll take it from here. So the capex would be in the range of anywhere between 3,000 to 4,000 per square foot, depending on which area, which center, what kind of interior solutions we choose to take.
Okay.
So basically, if you are looking to add another 1 lakh square feet, subsequently we can look at about 30 to 40 crores of capex.
30 to 40 crores. Okay.
Right.
And ma'am, I just want to understand your bookkeeping perspective. What is the major cost component and how much is
Sorry?
the percent? What is the major cost component?
The major cost component is the rent.
Sorry? Rent.
The rent. The rent that we pay, that is the major cost component.
Okay. And whenever you lend this properties, normally how is the agreement? Is it for the year, for the 2 years, or 5 years?
Ms. Yashwanti, your voice is not clear, ma'am. I would request you to speak a little bit louder.
Can you hear me now?
Yes, please continue.
Yeah. So, ma'am, just wanted to understand when you entered into this contract, this leasing contract with anybody for lending your properties and the rent, this contract is normally what is the period? Whether it is a periodic contract for a year or more than a year, or it is for a short term?
No. So we get into long-term lease rental contracts because, that is in interest of the business. So anywhere to the north of 5 years and, with a minimum lock-in of 3 years, that is the kind of agreements that we get into.
Okay. And WeWork is also expanding its co-working space very aggressively, especially what we can see in Mumbai. So what you would like to say as WeWork as your competitor, and what strategies you would have to expand and your presence as well as your brand in the market?
Sorry, Yashwanti, right?
Yeah.
So Yashwanti, we like to set benchmark, where we are concerned, where we do better than what we did yesterday. Today we do better than what we did yesterday. I mean, it would not be fair for me to say XYZ is my competition or ABC is my competition, because our positioning is very different. The way, our growth, the plans, everything is with a lot of firm footing. We would rather work in a systematic and a consistent manner where, we have a consistent growth instead of spreading ourselves too thin, having multiple centers everywhere, over-leveraging ourselves. So we are not looking at that kind of an approach at all. So, the way we run the business is very conservative. We are very risk-averse. And going forward, we, are adding one more thing to the strategy, that whenever we start a center, we would definitely start one where we have an anchor of 50% to avoid the cash burn. So, I mean, because we saw what happened to the EBITDA margin with one BKC, where it took us, a good 3 to 4 months to completely fill up. So that is something which has made us change the approach, and we would definitely be expanding with an anchor in place. So, I mean, like I said, I would not like to compare us with anybody else. I mean, everybody has their own way of working, their own processes, their own, plan going forward. So for us, sticking to our plan, focusing on our growth is something which is far more important.
And last one bookkeeping question. You said that rent paid is the major cost. Normally, how much as a percentage to sales it accounts to?
Sorry?
You mentioned that the rent paid is your major cost. Normally, what is the percentage of the revenue it accounts for?
Well, the rent paid is maybe about 40 to 50% of the revenue.
Okay. Thank you so much. That's all from my side. And wish you the best.
Thank you.
Thank you. We'll take the next question from the line of Sahil Sharma from Columbus Capital. Please go ahead. Mr. Sharma, I have unmuted your line. Kindly proceed. As the current participant is not answering, we will move on to the next question, which is from the line of Jignesh Vaida from Jiva Capital. Please go ahead.
Yes. I wanted to understand, like, the two new centers that you are starting.
Yeah.
It will also take 3 to 4 months to refill totally, be occupied. So I think from H2, your 100% utilization can be expected?
Definitely. In fact, like I said, so the Mahape Center, we already have a 50% anchor in place.
Okay.
So which means on day one, we'll be at 50% occupancy. And we have already started marketing the property. So there has been a lot of interest coming in, and we look to fill up the place, in fact, sooner than the other centers. And as far as MIDC is also concerned, I mean, we are definitely, there are anchors over there as well. So the cash burn will be relatively lower.
We have an anchor in the properties that the strategy that you are following. So our realization would be 10 to 20% lower if we market our properties and refill ourselves. Is that the way to think about this business?
No. In fact, our realization would increase from day one. See, what happens is if we take up speculative inventory, we are looking at taking up a premise which is absolutely empty, right? And that is something that takes more time to fill up, as opposed to having a facility where there is an anchor who's already occupying 40 to 50% from day one. So our realization goes up.
No, I'm talking of a long term. Suppose after 6 months you fill up with your own marketing, and rather than taking an anchor for the next 4 to 5 years, your realization would be better if you don't have an anchor, because anchor being he will occupy a large position, so he will pay, I think, lesser than single or double seats that you would market.
No, so there would definitely be a mix. I mean, see, the math at the end of the day is something that won't get affected, because even if an anchor would be coming in at a better price, maybe slightly lesser than the others, it would get averaged out with the other people coming in.
Right. So generally, what is the pricing at which the anchor is offered seat? Around 15-20% lower?
Not really. I think it would be maybe 5 to 7% lower.
Okay. And the other thing, out of the total debt, I think it's around 5 crores.
Yeah.
So, where we have used the debt exactly, for our premises or?
Correct. So, it's for a premise and for a vehicle.
For a premise?
So one of them is for our own, one of the properties which, we have given to the managed office client. That is something which is owned by Kontor, and that is the loan that is there, and then there's a vehicle loan. That's about it.
Oh, okay. Okay. So, all others we are renting it out.
Absolutely. The intention is to work on an asset-light model.
Right. And now coming to your cash flow, this last year your cash flow from operations was around 4 crores, 3.5 crores, and this year it has come down to 30 lakhs. So where the money is stuck exactly, if you can make us understand?
Kanan ma'am.
Sorry, can you repeat that question again?
Yeah. So, I am seeing the cash flow from cash flow, and in that, the cash flow from operations last year was around 3.45 cash generated from business activities. 3 crores, 44 lakhs.
Correct.
Understood. This year, 31 lakhs, 68,000. So where exactly, the cash is going?
So there's a corporate loan that we've given out, and that is where because keeping funds idle is something which doesn't make sense. So we have given a corporate loan, which is actually an interest-yielding loan. And that is where even our other income comes from.
No, I'm talking of cash flow from business activities. The loan component will be below it. Okay. So only from business activities where it has the money is stuck or something, I want to understand.
Sir, actually the money is not stuck anywhere, but the issue expenses are there, plus the increase in the company's management, the salaries increase.
We've actually had a considerable number of staff also that we've added.
Okay.
Because the team has also expanded.
Okay. No, there is one heading, changes in other non-current assets other than non-cash expenses. That is 3.67 crores. So what is it exactly wanted to understand in your cash flow?
Just a minute, sir. Just a minute.
Yeah.
So basically, these have gone towards the deposits of the new premises.
Oh, okay. Okay.
Yeah.
For MAPE and
MIDC Andheri. And also, of course, also BKC, the new center that we have taken in one BKC.
Okay, understood.
So currently in BKC now we have 2 centers.
Correct. And going forward, which other areas you are looking to cover? It will, apart from Mumbai, or in Mumbai only you would like to?
No. Definitely we are looking at other micro markets in Mumbai, but at the same time we're looking very aggressively in Hyderabad, Bangalore, NCR, and also cities like Ahmedabad.
Okay. Right. Okay, all the best. Thank you.
Thank you so much.
Thank you. We'll take the next question from the line of Sahil Sharma from Columbus Capital. Please go ahead.
Can you hear me?
Yes, sir. I would request all the participants to kindly use your handsets so that we may get optimum audio quality in this conference. Thank you.